Hey y'all, Zach with Real Property Associates here. I want to do a couple things really quick in this video. So first of all, I want to recap the 2016 real estate market in the Seattle area and in the surrounding suburbs. And then I also want to talk a little bit about 2017 and my predictions for the upcoming year. And we are already in January, so I guess I'm cheating a little bit as I'm getting a little bit of a head start into where the year's headed. But I wanted to get this out to you before we get too far into January and too far into 2016. So, quick recap on 2016. Last year in the real estate market was really big in the city of Seattle. And so we had, first of all, we had rents get over $2,000 a month on average in the city of Seattle, which is the highest we've seen ever in the city. That was also a 9% increase over last year's average rents in Seattle, and that's actually the highest growth that any big city had in the entire nation. So at one point this summer, Seattle was the hottest rental market in the country, not as far as price is concerned, but as far as the growth is concerned. We also saw an increase in the median sales price. The median sales price increased 12.6% from 2016 over 2015, which is a substantial amount. And something to note with that is that it's not a returning back to where prices used to be. So 2007, 2008 prices were skyrocketing, and then there was a big decline in prices in the kind of 2009, 2010, 2011, 2012. There was a decrease there in the prices. And when we look back, we've seen some substantial growth to get back to where we were, but we've actually, the last year plus, we've actually seen increases over where we were before. So this is new growth, not a returning back to where prices were. So that's definitely something to note. Another interesting fact is inventory, and this is something that we've been watching the last few years, and the supply of homes for sale is extremely low. And there's many factors that go into this, and part of it is prices, where people were holding onto their homes because they couldn't afford to sell. People were not able to buy something else. Now is kind of what we're facing. It's hard to buy another house, and so and especially if you're trying to buy contingent or selling your other house as part of the purchase. So we're seeing people that can afford to buy first and then sell their home. But it's for those people that need to sell their home before they can buy another one. There's a gap of time. Do we sell and rent for a little while? So there's been a lot of people with those kind of questions, and they've been holding on to their house. And so we've seen it. We still are, and it's been a few years at record low inventories. And as of December, at the end of 2016, we had inventory below a month, 0.6 months of inventory. And really, with that low of inventory and the amount of buyers that we have in the market, it's just going to continue to breed the competition. So it's something to look out for in 2017, and I'll talk a little bit more about that here in a second. And another interesting thing to wrap up 2016 conversations is the amount of new construction. And there hasn't been a lot of new construction of single-family units. We haven't seen as much of that, but we've seen a lot of new rental units being built. In 2017, there's projected about 10,000 new rental units being built in the city, and that was in an article here in the Seattle Times a few weeks back. And they were also talking about some of those numbers, and looking back, we've seen a almost doubling of what we built in 2016. And then if you look back over the last 5 years, we've seen more units built, actually not 5 years, last 10 years. We've seen more units built than we did the prior 50 years. So a lot of new construction for rental units, and there's a huge demand for that, with lots of companies like Amazon's expanding, and they're looking to increase their employees. I saw an article on that the other day. They're looking to grow, I think it was 100,000 employees in 18 months, and companies like Facebook relocating, Google coming to Seattle. We're seeing a lot of demand for rental units, and as well as housing units as those people decide to go ahead and buy. So something to look out for, maybe those rental prices that I was talking about at the beginning of the video, those cool down a little bit. That's what some of the people are projecting, and I would tend to agree with that. And we can just jump right into the 2017 part here. I do think that rental prices will level off a little bit. I don't see maybe that 9% growth, but we're probably still going to see 3, 4, 5% growth on the rental prices, and a few factors there. there's still a lot of people coming into the area. Yes, there are new units being built, but those are also units that are nicer and more expensive. And so even though we're seeing new units built, we are seeing nicer units built. So those prices are still going to be higher as those new landlords are trying to charge and want to charge premium prices for their units. But that being said, the competition for rental units will be a little less fierce. So maybe we can see maybe not those prices dropping, but maybe not going up as much. As far as home values are concerned, I really see another year of 10, 11, 12% price increases, and there's been a lot of people are talking about a slower, 7, 8%, and that's what they said last year too, and the year before that, as to look and see the market and say, man, I can see 10, 11, 12. That's not a very safe bet, so I'm putting myself out there a little bit with those predictions. But a few things to think about. So it's still a competitive rental market and prices are still going up. So people are thinking, man, I should just buy a house. So we still have that same psychology going on. Inventory is still at record lows. So there's still not a lot of supply in the market. Another factor, Seattle is still a really healthy economy, and we still have a lot of people moving to the area. So we're still seeing a continued demand for housing units, and we're seeing not enough houses for sale. And so as long as that trend continues, there's going to be competition in the market, and if there's competition in the market, prices are going to continue to go up. And even just speaking to this, the last few weeks, I get to cheat a little bit since I'm putting this video out after the beginning of January, but even today as we speak, I submitted a few offers for clients. One of them, there were 4 offers, and the other one they had 5 pre-inspections. So there's probably going to be 7, 8, 9, 10 offers on that house, and so both of those are in Seattle. And if you look at those numbers, it's January. It's supposed to be a little bit of a slower time in the market, and if January is like this, that's what January was like last year. And if we're going to project into 2017, I just see another year of this continuing. And so I'm going to put a few qualifiers on this. If for some reason the U.S. economy tanks, well, that's going to throw these predictions for a loop. And if something, if interest rates go up 4 or 5%, that's going to change things. But if things remain similar to where they're at, interest rates, stay in the 4s, and inventory remains where it's at, it's just I can't see a way around the price increases we've seen. So again, these are my predictions. I'm going to stand by them. I'd love to and look forward to watching this video here in a year to see where we're at. But I really do think Seattle is still a really hot real estate market. I see this continuing for a few years. And it's hard to see an end to it, and a lot of people keep trying to predict when it's going to end, and it hasn't yet. So if you guys have any questions about this, or you want to talk a little bit more about buying a house here in 2017, or just maybe you have a house to sell and you want to talk about that, feel free to reach out to me. I'll have my contact info here below. And again, thanks for watching. You guys have a great year. Bye for now.